Right. Now we have done different products, and last week we started to talk about corporate governance. Before we move forward, today I thought of doing a break to the normal pattern and to look at some questions. Anyway, we are preparing for the exam. One purpose is to get knowledge on the subject, the other to pass the exam. Okay, for exam purpose, I think you have already seen the past papers. You have number one, that is compulsory question, where you have to write in short answers an MCQ. Then the second part, you have to write complete answers for 4 questions, where each question carries 5 marks. Today, we will look into some of these questions. And I have mentioned, let's say, other than in question number 1, which is compulsory MCQ and short answers, the other one, it's based on one subject topic, say insurance. Then all the questions are coming out of insurance. So first you have to select the areas that you are confident. Anyway, I'll ask you some questions. Listen very carefully. Then write your answer. First, we'll do MCQ. That is very easy. Number 1. I'll say the 4 answers. Then in the chat box, send me your answer A, B, C, or D. Number 1. Specialized leasing company cannot raise funds by way of number 1. Public borrowings. A. B. Public deposits. C. Bank loans. D. Debentures. So in the chat box, send me, is it A, B, C, or D? I'll repeat. Listen very carefully. A specialized leasing company cannot raise funds by way of A. Public borrowings. B. Public deposits. C. Bank loans. D. Debentures. We have done this class in the classroom. We have done this question again and again. Specialized leasing company cannot raise funds by way of, what is the answer? A, B, C, D. Public borrowings, A. B, public deposits. C, bank loans. D, debentures. Okay, right. Now, this is one thing I want to check with you. Even though I'm continuing with the session, okay, even though I'm continuing with the session, you have to follow and carefully understand what we have done so far. You have to study. Don't wait until the exam is due for next week and start taking study leave and reading something today. Instead, prepare from the very beginning. So the question is, we have discussed in the classroom, specialized leasing companies, they cannot raise funds by what? So you have to very carefully look at public borrowings, public deposits, which is restricted for specialized leasing companies. I have given you, I think the very first day, I gave you a chart. From your left-hand side, from your right-hand side, the institutions which are governed by, regulated by CBSL, under that deposit-taking institutions, then other institutions. Specialized leasing companies came under other institutions. What does it mean? Specialized leasing companies cannot accept deposits from general public. So the answer is number 2. Okay. Now this is why you have to do papers from time to time. Right? Second one, which of the following mostly affects the credit risk in a finance company? Okay. So I'm telling you 4 answers. Tell me what is the answer. For the previous one, remember, specialized leasing company cannot accept deposits from general public. Second one, which of the following mostly affects the credit risk in a finance company? Number 1, fluctuating in interest rates. Number 2, depreciation of rupee. Number 3, credit worthiness of the borrower. Number 4, investment in government securities. Okay. What affects to the credit risk mostly? When I'm giving you a loan, what affects to its risk mostly? Number 1, fluctuating in interest rates. Number 2, depreciation of rupee value. Number 3, credit worthiness of the borrower. Number 4, investment in government securities. What is affecting mostly? Okay. Others? Okay. Right. So this time your answer is correct. Okay. The answer is C. Means what? Credit risk when giving a loan is mostly purely based on credit worthiness of the customer. So if the customer is not credit worthy, means what? When he takes a loan, if he's not ready to honor it, then that is the risk. Therefore, answer is number C. Number 3. Okay, listen very carefully. A cooperative society cannot, number 1, accept deposits from the public. Number 2, lend money to members. Number 3, invest money. Number 4, pay and charge interest. A cooperative society, we have not so far discussed, but this answer you must be able to write, underline. Okay, a cooperative society cannot, number 1, accept deposit from public. B, that is A, accept deposits from public. So think, can a cooperative society accept deposit from public? Number B, lend money to members. Can a cooperative society lend money to its members? C, invest money. Can they invest money? D, pay and charge interest. Whatever they do, can they charge interest? So what seems to be the answer? A cooperative society, can they lend? Can they invest? Can they pay and charge interest for their activities? When they give a loan, can they charge interest? Can they accept deposit from public? Now, accepting something from members is different from accepting deposits from general public. So what is the answer? Yes, A. Correct. Answer is A. Okay, next one. Okay. So listen very carefully. Number 4, maximum amount of compensation paid under the Sri Lanka Deposit Insurance Liquidity and Support Scheme for eligible depositors would be, number 1, A, 200,000, B, 300,000, C, 600,000, D, 1 million. A, 200,000, B, 300,000, C, 600,000, D, 1 million. Others? Yes. Deposit insurance scheme will ensure a maximum repayment of 600,000. Answer is correct. Then this area I will come up with one set of slides later. Now that is minimum capital requirement for a unit trust So this one we have not discussed in the class. Okay, so I will give you a handout later. We are every institute, what is the minimum capital requirement for unit trusts? That is 25 million. Anyway, we have not done that in the class. Right. Next, we look into venture capital. Okay. Right. So when you take a question, first you have few sentences. You will read, then the questions coming next. Venture capital finance is a type of funding provided by venture capital providers or companies. It is private equity capital that can be provided at various stages or funding rounds. Number one, list 4 fundraising means available for venture capital companies, 5 marks. 4 fundraising means available for venture capital companies. 4 fundraising mechanisms. 4 fundraising means available for venture capital. Okay, that's number one. I need 3 more. I need 3 more. We discussed this. Yeah, number 2, agreed. I need 2 more. Personal loans is out. The rest what you said is correct. Okay, so number 1, you have angel investors. Number 2, insurance companies. Number 3, pension funds. Number 4, high net worth financial companies. High net worth financial companies. Okay, so in past papers sometimes you asked what are the funding sources of venture capital, and you expected 3 answers, 4 answers. So you must be able to give the answer. Angel investor, then high net worthy institutions, then finance companies, sorry, pension funds and insurance companies. Another question out from the same venture capital. Briefly explain the importance of venture capital financing for economic development of a country. Okay, now tell me, how does this venture capital help to develop a country? Briefly explain the importance of venture capital financing for economic development of a country. How does the venture capital assist to the economic development of a country? Okay, right. Okay. Others? I got, yeah, some more. Okay, so the question asked, briefly explain the importance of venture capital financing for economic development of a country. Okay. So when we were discussing in the class, we talked about Steve Jobs, okay, how he started his company. If not Mike Makula, then Steve Jobs would not have created this big company called Apple. By now we know how important Apple to US economy. Okay, so number one, I'll read out the model answer. After that we'll discuss. Promotes entrepreneurs. Entrepreneurs converts his technical know-how to a commercially viable project with the assistance of venture capital institutions. Okay, so you can link that to Steve Jobs. So he had the technical know-how, but he had no money to start up a company. So by venture capital, you can promote businessmen or entrepreneurs. Number two, promote products. New products with modern technology become commercially feasible mainly due to the financial assistance of venture capital institutions. Encourage customers. The financial institutions provide venture capital to their customers not as a mere financial assistance, but more as a package deal, which include assistance in management, marketing, technical, and others. Brings out latent talent. While funding entrepreneurs, the venture capital institutions give more thrust to potential talent of the borrower, which helps in the growth of the borrowing concern. Promotes exports. The venture capital institution encourage export-oriented units, because of which there is more foreign exchange earnings of the country. You are talking about the economic development of the country. If so, if you can export, you can earn forex. As a catalyst, a venture capital institution acts as more as a catalyst in improving the financial and managerial talents of the borrowing concern. The borrowing concerns will be keener to become self-dependent and will take necessary measures to repay the loan. Creates more employment opportunities. You said that. By promoting entrepreneurship, venture capital institutions are encouraging self-employment, and this will motivate more educated unemployed to take up new ventures which have not been attempted so far. Brings financial viability. Through their assistance, the venture capital institutions not only improve the borrowing concern, but create a situation whereby they can raise their own capital through the capital market. In the process, they strengthen the capital market also. Helps technological growth. Modern technology will be put to use in the country when financial institutions encourage business ventures with new technology. Helps sick companies. Many sick companies are able to turn around and after getting proper nursing from the venture capital institutions. Then the last one, helps development of backward areas. By promoting industries in backward areas, venture capital institutions are responsible for the development of the backward regions and human resources. Okay, now this question, you need not to have a ready-made answer. Okay, so at the exam, you can think and write a good answer. The importance of venture capital for the economy. Okay, so you have said certain facts. Here you can see certain facts. You need not to by heart, but these questions you can write something in general. Okay, so venture capital companies, number one, they make concepts become realities where feasible products are created, giving more employment opportunities and with the ability to export the products. Then you can talk about the benefits. Okay, so if you can export, you can earn foreign exchange. Then you can help to educated, unemployed, young who do not have assets or securities to get conventional loans from banking sector. Just by evaluating a proposal, venture capital firms can provide loans. With that, you can help new technological developments. So you can write something in general. So remember, venture capital, we have discussed in the class what we discussed and what we have noted are relevant for the answers. So We have talked about the funding sources. So that's a direct question. Second one, it's not a direct question. So you must be able to write by thinking and write in general. Third question under venture capital. List the main features of venture capital funding, 5 marks. List the main features of venture capital funding. Okay. So write your answer. List the main features of venture capital funding. What are the main features? Okay, right. Right. Now, the main features of venture capital funding. Okay. First, I'll read out the model answer. You have given answers good. It is basically financing of new companies which are finding it difficult to go to capital market to raise funds at their early stage of existence. This finance can also be loan-based or in convertible debentures so that they can carry a fixed yield of the providers of venture capital. Those who provide venture capital fund aim capital gain due to the success achieved by the entity that borrows. It is a long-term investment and made in companies which have high growth potential. The provision of venture capital will bring rapid growth of the business. The venture capital provider will also take part in the business of borrowing entity, whereby the venture capital financier not merely confines to finance, but also provides managerial skills. Not all the capitalists will experience high risk, but venture capital financing contains risk. You have said that. But the risk is compensated with higher return. Okay. So risk is very high. That is compensated with higher returns. Otherwise, no one wants to invest in the venture capital. Not much of technology is involved in venture capital. It involves financing mainly small and medium-sized firms, which are in their early stages. With the assistance of venture capital, these firms will stabilize and later can go in for traditional financing. Helps growth of economy. By promoting new entrepreneurs and by receiving risk sick units, a flip is given to the economic growth. There will be increase in the production of consumer goods, which improves the standard of living of people. Okay. So what you said is correct. Influence in management, yes. The venture capitalists not only provide finance, but also involved in day-to-day management of the business. With that, the managerial skills are also imparted. Lack of liquidity. Okay. So venture capital firms once provided fund to a new project. The only way to recover is to ensure the company become a successful unit and to sell it in market by listing. Okay, so you can justify your liquidity with that. A new technological knowledge. Okay. 'Okay. 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 ' concepts which are forwarded by young entrepreneurs who are technically very sound. However, such entrepreneurs find it very difficult to obtain money from conventional banking system because they cannot, through payback history and securitize their loans as they don't have assets. But the venture capitalists only look at project proposals. They do not look at collaterals. Therefore, venture capital business is ideal for young, uh, technically sound individuals. Risk we talked about. Innovate products. Okay, right. Next one. Okay, so you can see this is how at exam the known areas are tested. Number 4. Explain seed financing in relation to venture capital. What is seed financing? Explain seed financing. SEED, seed financing. What is seed financing? Okay, right. So seed financing is the low-level financing needed to promote a new idea. Agreed. Okay, so seed financing is the first stage of financing provided for the entrepreneurs who want to prove their concept is feasible. So the model answer, seed financing means the first financing. You said that. Okay, first financing. That a startup company, okay, very new company, receives from a venture capital firm or from an angel investor. Okay, so that's low level of financing needed for startup companies to prove a new business idea. Good. Right. So that's on venture capital. So you can see the format. Number 1, there are questions out of what we have learned so far. So you can directly write something. Okay. What are the sources of venture capital? 1, 2, 3, 4. You can directly write out of what we have discussed in the class. Certain things you have to think at that particular moment. Okay. What are the benefits of venture capital to the economy? Okay. Then I'll take another from SEC. Right. So first I'll read out. That is question number 5. First, you have few sentences. The Securities and Exchange Commission of Sri Lanka was established in order to promote, develop, and maintain a capital market that is fair, efficient, orderly, and transparent manner. So we talk about seed funding, right? Now, seed funding is like the seed of a tree, right? The tree is a very big one, but it starts with a seed, very small one. Seed funding means providing loans, providing funds in the initial stage of a business, startup business. Right? It is the first level of funding. Remember, say, in order to develop Apple computers to this stage, you may need, let's say, 400 million. But to prove that you can make a computer, you may need only 1 million. Okay? So to develop Apple to a particular stage, you need 400 million. But to prove that the piece of paper that you carry and say, I can make a computer, okay, show me the first computer. Definitely, that cost is less than 1 million. That is the seed, okay? Maybe just 80,000, right? Just 80,000, right? I'll give you this 80,000. Show me a workable computer. So you assemble different parts and you prove me that you can produce a computer, right? The pieces of papers now put into a practical thing. That is the seed capital. Okay? You don't need a huge amount initially. You need a very small amount. So this is known as seed. Seed is a very small thing where a big tree can come out in long term. Seed financing means the first financing that a startup company receives from a venture capital firm. Right. Now our question is on SEC, right? Securities and Exchange Commission. That is a regulator. And when we discussed about shares, we talked about SEC, right? Question number 1. What are the main functions of SEC? What are the main functions of SEC? What are the main functions of SEC, Securities Exchange Commission? What are the main functions of SEC, Securities Exchange Commission? What are the main functions of SEC? Yeah. Yeah. Grant license, correct. Continue that in that line. So I said the regulator is like a tiger. So you must have teeth. Okay. I have discussed that again and again. So you have the ability to give the license. Okay. Continue in that line. Yes, you grant license, correct. I need at least 3 or 4 more facts under functions of SEC. Okay, right. Number 1, grant a license to a body corporate to operate as a stock exchange, stockbroker, unit trust, and ensure the proper conduct of its business. Right? Grant license, correct. For whom? For stock exchanges, right? Stockbrokers, then unit trusts, then credit agencies. Right. Number 2, to grant a certificate of registration to any person to carry on business as a market intermediary and to ensure the proper conduct of such business. Number 3, to issue general or specific directions to a licensed stock exchange or a licensed stock broker or a licensed stock dealer or a licensed managing company or a trustee of a unit trust or a registered market intermediary from time to time. So you issue directions. Now, last week we looked at corporate governance directions. That is issued by CBSL. In the same manner, directions from time to time can be issued by SEC to the institutions coming under its purview. Then number 4, to advise the government on the development of the securities market. Remember, these same things you can write for the regulators. What are the functions of a regulator? Advise government on the development of capital market. Now that's where SEC matters. Number 5, to regulate the listing and issue of securities in a licensed stock exchange. Number 6, to cancel or suspend the listing of any securities or the trading of any listed securities or to suspend the trading of all listed securities. Okay. SEC can suspend trading of any share at any moment, right, for various reasons. Now, when the stock market comes down more than 5%, SEC immediately suspend trading of that stock exchange. Now, I told you about bubbles. Just 2 weeks ago, Colombo Stock Exchange heated up. All of a sudden, it shot a bubble, unnecessarily, going at an alarming speed. And we can predict what will happen next. Next, it will come down drastically. Right. So when it came down drastically, it came down more than 5% in a day. Immediately stopped. Allowed. Again stopped. Within a day, 2 times trading was suspended. Now that is a function of SEC. Next, to inquire and conduct investigations into any activity of a licensed stock exchange, a licensed stock broker or licensed stock dealer, a licensed managing company or the trustee of a unit trust, a registered market intermediary or any listed public company. Okay, they can inquire into any activity of these institutions coming under its purview. Okay, right. So the functions of SEC. Now you must be able to write functions of any regulator: issuing the license, suspending the license, canceling the license, advising the government, issuing directions, right? Investigating. Now, to any regulator, you have a ready-made answer. Okay? So why I want to do this question and answer session today, because you have at least more than 1 complete month to prepare. Now you know where you stand. Right? Okay, next one. That's number 2 under SEC question. Briefly explain the following market makers regulated by SEC. Right? Briefly explain the following market makers regulated by SEC. Number 1, investment managers. Number 2, underwriters. Right, your answer. Good. Very good. Okay. So I'll read out the model answer. Investment managers. Investment managers means a person who, for the fee or commission, so that should be in your answer, for the fee or the commission, engages in the business of managing a portfolio of listed securities on behalf of an investor or advise any person or in the on the merits of investing, purchasing or selling listed securities. Okay, so that is investment manager. Then the second one, underwriter. Underwriter means any person who is in connection with the public issue of securities of a listed public company or the company which has applied for the listing guarantees to purchase unsubscribed securities of such company. You said that. Unsubscribed securities of such company for the fee or commission, or who negotiates with such company to purchase such securities in the event of the offer being not fully subscribed, and include any person who purchased such issue from the company specifically with a view to offering such securities to the public. Right. So both answers accepted. Third question coming under that, once again, think in general and write. Every licensed stockbroker or stock dealer shall maintain and preserve the books of accounts and documents for the period of 5 years. Okay, so you have to keep all relevant documents for at least 5 years. Right? List 5 such main books of accounts or documents to be maintained by a stockbroker or stock dealer as per the rules issued by SEC. You have to keep your books, financial or certain other documents at least for 5 years. What are these documents? What are these books that you have to keep for 5 years? Okay, right. So until, okay. Now Achini, okay, I'll send this answer, investment manager and underwriter. Okay. Anyway, right. So you send me the answer for this one. 5. and I'll send answer for your question. Okay, send me answer for this one. I'll send answer for what you have requested. Okay, so the third one was, what are the books that you should keep for 5 years? Right. So I'll read out the answer. Cash books, general ledger, client's ledger, bank statements and bank reconciliation. So you have mentioned all that. Good. Then other things like this: register of transactions contract wise, register of transactions company wise, register of transactions client wise, members contract books showing details of all contracts entered into with other members of the same licensed stock exchange, duplicates of contract notes issued to clients, written consent of clients in respect of contracts entered into with whom members were available. Okay. Then the last question under SCC: What are the benefits of credit rating to corporate borrowers? What are the benefits of credit ratings to corporate borrowers? Okay, right, some more. Cheap cost of funds, that's agreed. What are the others? Okay, right. Right. What are the benefits of credit rating agencies? Let's say you get triple A credit rating. What does it mean? Without any problem, you can be funded. You are trustworthy. Okay. Means what? If you can get good credit rating, you have the access to cheap funds, very low interest rate. You can get low interest rate funds. Okay, I'll read out the answer. Cheap cost of funds, then you have to describe that. Credit rating lends credence to the financial competence and the strength of the company. It also enhances the image of the corporate. Borrowers can quote lesser rate of interest of fixed deposits or debentures or bonds. Whatever you do, let's say you offer fixed deposits, you can offer very low interest rate, NSB, AAA. So the general public is confident this bank is one of the best place to deposit. Or if you go for corporate bonds, we look at first the credit rating issued, right? So this is a company where the rating is really good. Through highly rated securities, the corporate borrowers can quote lesser rate of interest on fixed deposits, debentures or bonds. Risk averters who avoid taking risks come forward to invest their money safely in low-risk securities. Ultimately, the company is able to raise funds at cheap cost by issuing securities. But you mentioned by cheap funds, now you have described. Then the second one, increased sources of borrowing. A company can have increased share in the security market by advertising its highly rated securities through television and press media. So we have seen banks and other companies, when they advertise about their issues, fixed deposits, bonds, they talk about their rating. And investments, as investors are assured of prompt payment of interest and principal on rated instruments, the borrowing companies find resource mobilization easy. Yes, the investors look at the ability to pay back and ability to honor the interest. If so, they are ready to accept the instruments. People from all walks of life always prefer highly rated securities. An effective marketing tool. Yes, the rating are so designed that they provide an investor with a clear indication about the credit worthiness of the instrument. Having projected a good corporate image, the rated company can build good customer relations for products manufactured by them. Thus, credit rating acts as a marketing tool in creating value addition to the products. Next, reduced cost in public issues. When you are going for a public issue, say IPO, your cost is less. Rated companies can approach the investors easily for mobilization of resources. As ratings instill confidence in the investor, the rated companies can attract them with least efforts. Without involving in any public stunts and gimmicks, they can economize and minimize the cost of their public issue. Rated companies benefit from best pricing and timing of issues. Okay, I think I have told you. There was a website, a single website called randora.lk. Now that is not available. Those days they had a very nice article. They showed some advertisements where popular cricketers and actors appeared on certain financial instruments. Means what? Whatever the company that advertised them incurred a good amount of money to get these celebrities to appear in the advertisements. But these companies failed. And jokingly they say, don't buy instruments offered by companies where cricketers appear. Means what? When your credit rating is less, okay, they further said, credit rating of these companies was very low, like C or C minus, right? But such companies make unnecessary expenditure on advertising to get deposits. But if your credit rating is good, you need not to look into that much of advertising. Increased scope for expansion and growth of the business. Increased support of brokers and financial intermediaries. Encourages financial discipline. Okay. Credit rating represents the relative capability and willingness of an issuer of a debt instrument to serve the debt obligations as per the terms of the contract between him and the investor. In order to fulfill their commitments toward the investor, the rated companies strive to improve their financial performance. Okay. Now, we talked about venture capital. That's one question. Then we talked about SEC related. That's another question. Now we are moving into payment systems. Have you done payment systems in the class? Say yes or no. Credit card, debit card, ATM cards. Have we done that in the class? Say yes or no. Common ATM switch. Just tell me yes or no. Have we discussed about ATM cards, credit cards, debit cards, scriptless securities? Okay, good. Then we look into this question. So once again, at the beginning, you have few sentences. The CBSL shall function as the regulator and supervisory authority for payment cards and mobile payment systems and shall be responsible to regulate and supervise all service providers of payment cards and or mobile payment systems. Right. Number one, list the persons who shall be eligible to apply for a license to engage in the business or functions of a service providers of payment cards and or mobile payment systems. Okay. So we have not directly discussed this question. Yes, but you can think and write the answer. List the persons who shall be eligible to apply for a license to engage in the business or functions to payment cards or mobile payment system. Okay, write your answer. Okay, licensed commercial banks, right? Good. What else? Okay, licensed specialized banks, good. Yeah, licensed finance company, correct. What else? Okay, mobile payment system. With that word, you can add one more. Then I'll accept it's a complete answer. LCBs, LSBs, LFCs, correct. Mobile payment system. You know that. Who is covering, who comes under that category? Mobile. Operators who provide mobile telephone service. Very good. So I'll accept that as a complete answer. Good. Second one. What are the accepted modes of payments available in Sri Lanka? What are the accepted modes of payments available in Sri Lanka? Yeah, I think when I gave you the slides, I divided into two parts. Payments by whom, payments by another method. Very good. Cash payment, and that's number one. Non-cash payment, number two. Non-cash payment, I divided into again another two. What is that? Correct. First you have cash payment, one side, non-cash payment. Non-cash payment further divided into two. Document based and correct, document based, electronic based. I accept that as a complete answer. Next one, number three. Briefly explain the following with respect to payment cards and mobile phone based payment mechanisms. Charge cards, credit cards. Charge cards, credit cards. Okay. Now charge card means there is a limit. Charge card means a payment card which involves a line of credit granted by the issuer to the cardholder, where the credit utilized by the cardholder must be settled fully or on before a date specified by the issuer without any extended credit. Without delay, correct. Credit card. Okay, so what is credit card? Okay, tell me what is credit card then? What is a credit card? Very good, correct. Credit card means a payment card which involves a line of credit granted by the issuer to the cardholder, where the credit utilized can be settled in full or in part or on before a specified date. And you said that. Right. The issuer may charge interest or other charges on any amount not settled on the specified date. Correct. Next, what are the advantages of electronic payment systems? What are the advantages of electronic payment systems? What are the advantages of electronic payment systems? Okay, right, good. Time saving, expenses controlling, reduce the risk of loss and theft, low commissions, user friendly, convenience, good. Right. Then right. Then next question, certain areas you will not be able to answer, but I'll use as a step to explain the rest of directions. We talk about corporate direction. Then there are a lot of other directions which I'll make available for you to read next week. And the next week session will be on that. Let's say there are a lot of directions about single borrower limit, loan to value ratios, maximum interest rate, consumer protection, capital adequacy, core capital, right? Okay, Right. So the next question is on leasing. Finance leasing business plays a vital role to enhance the business activities in the economy. That is the statement. Number one, what are the major sources of funds available for specialized leasing companies? We have discussed this class in the class again and again. What are the funding sources of specialized leasing companies? What are the major sources of funds available for specialized leasing companies? Write your answer. Funding sources for specialized leasing companies. Okay, funding sources of specialized leasing companies. What are they? Okay, right. Capital, shared warrants, commercial papers. Okay, right. So the answer reads equity. That's what you said. Capital, debentures, corporate bonds, commercial papers, promissory notes. Okay, right. Now, next question you will not be able to answer. That's okay. That is the area where I have to discuss next week. Name 5 prudential directions available to specialized leasing companies. Right. For finance companies, for leasing companies, there are directions issued by central bank. Name 5 prudential directions. So the answer is provision for bad and doubtful accommodations, single borrower limit, business transactions with directors and their relatives, related party transactions, loan to value ratios, maximum interest rates, consumer protection framework, minimum capital adequacy ratios, minimum core capital requirement, minimum liquid assets. Okay, so I'll discuss these directions next. Number 3, every company intended to register as a specialized leasing company is required to submit a certified copy of operating manual together with the application to the director, Department of Supervision of NBFIs of CBSL. Briefly explain the minimum criteria to include in such operating manual. Okay, so the answer is the period of duration of a finance lease, the method of recovery of the payments due on finance lease, the protection by the lessor of the rights of lessee against claims, the disposal of such equipments. Okay, that's there. Then distinguish between finance lease and hire purchase. Okay, so I had to do that. Leasing. Under leasing, you have finance lease and operating lease. What are the differences? Then leasing and hire purchasing. What are the differences? So I have to do that in the class. Right. Okay, so that's from one paper. Now I'll take up another paper that was January 2021. Okay. I'll ask you a question which we have not discussed in the class, but I often ask you to get updated, and I have told you to read newspapers like Financial Times. Okay, something very simple. You have to fill in the blanks. Okay, but an entity shall obtain shareholder approval for the rights issue of shares at a blank meeting. Right? In what meeting should you obtain shareholders approval to issue rights? Okay. Okay. An entity, okay, think and send me the answer. Right. Now, when you say AGM, annual general meeting, that means on every year, that's why you call it annual, there is a meeting with shareholders where you will read and agree upon things to be notified within a year. Let's say who is going to be your auditor. Every year, annually, you are putting that forward for the shareholders approval. Who is representing you as the directors? Every year, you put them as their names. So the shareholders approve that. For that purpose, every year, annually, there's a general meeting. Now, rights issue is not coming on annual basis. Rights issue comes on special event, right? You are not going for an annual, every year, you are not going for a right issue. So right issues, let's say, now last Thursday, there was a meeting of this kind at People's Merchant Bank for a right issue. Now the People's Merchant Bank is coming with 7 rupee right issue, and the shareholders unanimously approved that for that special purpose, right? So the meeting did not take place more than 5 minutes, right? The whole purpose is to get the approval for the rights. That's all. So what is the meeting? Now AGM is out. AGM is for annual basis. Now this meeting is only about rights. What do you call that? Okay, you have to find out. I'll just give a acronym, not AGM, but I say EGM. What is that? What is EGM? Now annual general meeting you call AGM. Here it's not something that happen on every year. EGM, what is EGM? Extraordinary general meeting, not something appearing on every year like annual. EGM. So there was a EGM of shareholders last week for People's Merchant Bank's rights. So if you get updated with news, financial news, these kind of questions are not a big issue, right? So I'm asking you to look at the slides, read them, understand, at the same time get updated. We talked about bubbles in the stock market. Last 2 weeks we experienced that. All of a sudden, unnecessarily interest, everyone want to take part in this share market, then it collapsed, then everyone want to sell even at a lower rate, then the market stabilized. Corrections, bubbles, what we talked was experienced in the market. And throughout the world, the same behavior. When the market is suddenly going up, everyone want to join, and it cannot sustain. When it start to burst, everyone want to sell out and blame the government. That happened. That's how it happened everywhere in the world. So we talk, we teach you, and your task is to get update. Okay. Then the last paper. I'm asking you some questions just to show you that the same questions are repeated. That was question number 7 of January 2021. Venture capital financing is exposed to high risk. Number 1. What is meant by venture capital financing? Number 2. What is meant by seed funding in relation to venture capital? Means what? What we discussed just now in some other paper was asked in Jan 2021. Okay, we look into some other area. Right, in another paper, we talked about unit trusts at the very beginning. Unit trusts are introduced to Sri Lanka to provide an alternative investment opportunity for people to benefit from the capital market. There are many unit trusts available in Sri Lanka, and investments in unit trusts have become a popular mode of investment today among passive individual investors. Number 1, describe a unit trust and how it operates. 5 marks. Describe a unit trust and how it operates. Okay, good. Unit trust is a pool of funds collected from a number of investors who share a common financial goal. Yes, they purchase a portfolio of financial securities from the trust. Okay, collection of investment. Yes, pool. Correct. Your answer is accepted. Right. Next one. Mention 2 benefits of investing in a unit trust. 2 benefits. Okay, I would say, what are the benefits of investing in a unit trust? You can write more than 2. What are the benefits of unit trusts? What are the benefits of investing in a unit trust? Very good. Diversification, liquidity, affordability. Very good. So the answers reads like this. A unit trust can offer a much faster rate of return than a bank deposit over a period of 3 to 5 years. It is cost effective as even small amount of like ₹1,000 can be invested in a unit trust. Investors doesn't need to spare time to assess investment decisions as this is done by the professional fund management. You said that, professional fund manager. Assets of the unit trust are under the custodian of an independent trustee who looks after the investor's interest. It's flexible as the investors can invest additional money whenever they have some and can pull money out whenever they need it without any penalties. Returns from unit trusts are tax-free in most circumstances. Good. Next. Unit trusts can be broadly classified into two categories. Name and briefly explain them. Unit trusts can be broadly classified into two categories. What are they? Unit trusts can be broadly classified into two categories. Name and briefly explain. Okay. Now, two categories. Two categories of unit trusts. Under that, number one is open-ended funds. Right? Now, open-ended funds mean where investors can enter the fund at any time and exit, and existing investors can exit out of the fund at any time. Free entrance, free exit. There is no restriction on the number of units to be issued by the fund, and the fund has no maturity. So this fund has no maturity, and it has no restriction of the number of units you have to have. The units are purchased from and sold to the fund management company. That's number one. Number two, closed-ended funds. Closed-ended funds. Now that has a maturity. Okay. Closed-ended funds are funds that carry a maturity date. The fund management company will open these funds to the prospective investors for subscription for a specific period of time. At the end of the subscription period, the fund management company will close the fund for any new subscription. Investors who have subscribed for the funds cannot exit at any time they wish unless the fund is listed in an exchange. If the fund is listed in an exchange, the existing investor can sell their units in these funds in the market at the market price, and new investors can purchase units in the market. Usually, units of these funds traded in the market at discount to the net asset value of the fund. If the fund is not listed in exchange, the fund management company may provide for partial redemption after a certain period. Okay, open-ended funds mean you can enter and exit without any restriction. Closed-ended funds mean these funds has a maturity date. Till then, you cannot exit. The only mechanism to exit is if it's a listed fund to sell the units to the potential shareholders. Okay. So there are two types of funds. Last question. There are different types of unit trusts. Now, first, what are the broad-based classification categories? So you have open and close. Now this one, different types of unit trusts that we have discussed in the class. What are the different types of unit trusts? This you can write, yeah, good. Gilt-edged, that's number one. What are the others? Income funds, good. Balanced. What else? Indexed. Market, money market, correct. Right. Then we discussed about corporate governance last week. Now this question comes from that area. So the first you have few sentences to listen. Good corporate governance in financial institutions is essential for its risk management and stakeholder protection. Indicate the main requirements to be fulfilled under the following sections of the finance company's corporate governance direction. Main requirements to be fulfilled. Main requirements to be fulfilled. Okay. What are the main requirements to be fulfilled under following sections? Number one, fitness and propriety of directors. For that, we discussed in the class, chairman and CEO. That we discussed in the class. That we discussed. Okay. Now you have to answer. On this one. Yeah. Right. Yeah, we discussed them last week. Say fitness and propriety of directors. We talked about age and the number of companies. Chairman and CEO, can one individual be the same? Board appointed committees, we talked about at least 2 such committees. Meetings, how many times should you meet? Yeah, send me answers. Okay. Now, the first one, fitness and propriety. We talked about two factors. Age is one. Then we talked about how many maximum number of companies one can be a director. So that must be part of the answer. Right. Should not be performed by the same person. Correct. If it happens, now there were years. If so, you have to appoint a senior director. Right. Continue. Okay. Right. Now, right. I'll read out the answers. Fitness and propriety. A person over the age of 70 years shall not serve as a director of a finance company, and a director of a finance company shall not hold office as a director or any other equivalent position in more than 20 companies, societies, bodies, corporates, including associate companies and subsidiaries of the finance company. Okay. So that is on the number one. Number two, the roles of chairman and CEO shall be separated and shall not perform by one and the same person. The chairman shall be non-executive director, and in case where the chairman is not an independent non-executive director, board shall design and designate an independent non-executive director as the senior director, with suitably documented terms to refer to ensure a greater independence element. Number three, board appointed committees. Every finance company shall have at least two board appointed committees reporting directly to the board, and these are the audit committee and the integrated risk management committee. Each committee shall appoint a secretary to arrange its meetings, maintain minutes, records, and carry out such other secretarial functions under the supervision of the chairman of the committee. The board shall present a report on the performance, duties, and functions of each committee at the annual general meeting of the company. Number four, meeting of the board. The board shall meet at least 12 times a financial year at approximately monthly intervals, and a director who has not attended at least 2/3 of the meetings in the period of 12 months immediately preceding, or has not attended the immediately preceding 3 consecutive meetings held, shall cease to be a director. Participation at the directors' meeting through an alternate director shall, however, be acceptable, and attendance. Okay, good. Then, right. So these papers are not difficult to you. Right, you can write the answers. Then there was another one. You need not to write. We'll just discuss. Effective regulation lays the foundation for investor confidence, supports efficient functioning of the capital market, and thereby builds the platforms for economic growth. The Securities and Exchange Commission (SEC) of Sri Lanka attempts to ensure that the regulatory environment is relevant and effective, and the securities law is tailored to meet the needs of the market and the international best practices. Briefly explain the role of following market makers regulated by SEC: investment manager, margin provider, underwriter, stockbroker. At least 2 we just discussed today. Right. Now, a little bit out of what we have been discussing. Corporate governance. Now, since finance companies, banks, specialized leasing companies are regulated by CPSL, these good corporate governance areas should be compliant. So, at the age of 70 you have to leave out. But think about institutions which are not coming under the supervision and regulation of CBSL. Let's just, for an example, think about a listed company in Colombo Stock Exchange, that is DSI, your shoe. In this company's AGMs, most of the time, the proposal is passed. I think about 4 or 5 directors are more than 70 years old. Now, if you want, you can compare Harishchandra Mills, that is a listed company, and Samsung of South Korea. They both started doing almost the same business. In 1950s, they both were same companies, similar companies, making noodles, right? And 1950s, Sri Lankan Harishchandra Mills issued shares to its own employees, did a lot of benefits to the employees. But today, where is Harishchandra and where is Samsung? That's where you must have good corporate governance. I'm not saying Harishchandra is not managed well. No, it's managed well. It's a profit-making, very good company. But think about the possibilities. I'm not saying DSI is not well managed. That's perfectly managed. But think about the possibilities. Now, Sir Richard Branson, one of his problem was when he was young, he can think as a young person. But what happened when we grow old? We cannot think as a young person. And he prefers to start up a venture company, Virgin Venture. Through this venture company, he is funding a lot of new projects proposed by young people. Right. Okay, we'll look into another one. That's on insurance. Right. So insurance is another question often repeated. Insurance is one of the major products offered by NBFIs to assist manage various risks confronted by households and business. Number one, define long-term insurance and general insurance and provide an appropriate example for each. Define long-term insurance and general insurance and provide appropriate example for each. Okay, you need not to be misled by the term define. Just write what you feel. Okay. Good. long-term insurance is issued for longer periods or even for the whole lifespan of the insured. And general insurance is usually issued for the period of 12 months or shorter duration, which covers financial losses incurring from an event. Okay. Long-term insurance example: personal life insurance, business life insurance, industrial life insurance, insurance of pension scheme, permanent health insurance, etc. So long-term insurance covers more than 1 year. General insurance should be based on 1 year or lesser period. Automobile, casualty, homeowner, property, etc. Right, good. Second one, what is the difference between bank assurance and reinsurance? What is the difference between bank assurance and reinsurance? Bank assurance and reinsurance. Yeah. Bank assurance is a collaboration, a combination of insurance company and banks to provide insurance benefits to the customers. Yes. So it is not bank giving an insurance product, but a combination of bank and the insurance company, a collaboration where both parties get benefits out of that. What is reinsurance? That is insurer getting insured. Right, good. Next one. Briefly describe the deposit insurance scheme in Sri Lanka and how it assists in the mitigating losses to the depositors. Briefly explain DIS, Deposit Insurance Scheme in Sri Lanka. DISSL, Deposit Insurance Scheme in Sri Lanka, and how it assists in mitigating losses to the depositors. Hello. Good morning. Deposit insurance in Sri Lanka. and the benefit. Okay, what is the benefit getting out of deposit insurance scheme for the depositor? Okay. Right. How? Yes. I'll check a mechanism. Normally, you have like this question and model answers, which you can purchase from IBSL, from this institute. Okay. So that is very beneficial for you. Right. All the past papers and the model answers are available. Right. So next week I'll tell you how, if you physically come here, you can purchase them. But I will check and let you know how to get these past papers. Always get past papers with the model answers. So you can check, you can write first, then check with the model answer. Right. So all the model answers are available at the IBSL. I'll check whether you can physically come here or any other mechanism. Right. Now, deposit insurance is one of the key components of a financial safety net, along with supervision, resolution, and lender of last resort facilities. Right. So SLDIS is mentioned. In line with the international developments, the CBSL took steps to introduce a mandatory deposit insurance system from 2010 called the of which the name changed Sri Lanka Deposit Insurance and Liquidity Support Scheme with effect from 2013. The purpose is to establish and to create a mechanism to protect depositors from the failure of financial institutions and thereby to promote the stability. In the event of a license cancellation by the monetary board, the depositors will be compensated up to a maximum of 600,000 rupees per depositor per institution. However, the liability will be limited to the funds available or raised. Right. So that is on SLDIS. Now the last question here: what is meant by moral hazard? Okay, so we have discussed that again and again in the class. Okay, now what I did today before completing the entire set of topics coming under syllabus to get your attention for the exam, right? And I'm happy with the way you answered, but you have to improve. At the same time, do not miss a single answer. For an example, rights issue, where it is get approved, AGM or EGM. If you read the latest news, you can get that word. Extraordinary General Meeting, EGM. Right? Okay, with that, I'll end today's session. Next week, we'll look into other areas of directions, then some other topics. After that, we can complete the entire syllabus. Thank you.